Hello, good morning, ladies and gentlemen. You're welcome to another new week. Before we kickstart the session, I want us to quickly verify that we are on the same page here. So, if you can see my screen and you can hear my voice clearly, I would appreciate that you type in hi in the comment section so that we can get the session started. Okay, so let's see what we have here in the comment section. All right, okay, thank you very much. I see 398 188, okay, 402 Nova, thank you very much. Oh, Carrie, good morning. I see you, thank you. Hey, Steamroller, good morning to you, thank you for that confirmation. And then I can see 0067, thank you for that confirmation. I guess we are very good to go this morning. Well, I'm so excited to welcome you to yet another promising session on the Extreme Speed. My name is Sharif Daramola, and for the next 1 hour, we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. Well, being the first trading day of the week, we shall be taking random pairs, which we shall be monitoring throughout the week. And I want to implore you that if you have any instrument you want us to look at for the week, this is the most appropriate time to be dropping these ideas in the comment section so that we can try to incorporate it into our plans for this week. And I'm so excited to come here this morning as the setup have been seen so far. As the week has started on a very good note, we have some couple of pairs I've already chosen, which I think we could get good trading positions during the course of the week, which I will be sharing during the course of the session. And for those who are joining us for the first time, you're welcome on board. I'm glad to have you around, and you can always feel free to drop in your inquiries in the comment section if need be. And if you also have any pair you want us to look at, feel free to drop it in the comment section. And if you really don't understand how this works, I would advise you to stay tuned in throughout the session so that you can be part of the session. Then with time, you get to understand how this works and how you can actually use this information we have here to make your own personal decision during the New York session. So with that being said, here I will be diving right into the chart. But before we go into the chart, we shall be looking at the economic calendar to see the macroeconomic events that we shall be looking forward to for this week. We have a couple of this macroeconomic event for the different pairs I have chosen actually. And if we go into the economic calendar here, today, Monday, February 13th, we have the GDP product for the Japanese yen, which is coming up later on in the day. That is very, very later on in the day. And we have a consensus of about 0.5%, which is against the previous data of minus 0.2%. And that seems more like a positive expectation for the USDJPY. So we don't really know what will be happening, but whatever happens, we definitely shall be seeing the reflection of the anticipation of the actual event on the chart as price action. Then on Tuesday, we have the claim and count charge. This is for the pound sterling. We also have the unemployment rates also coming up tomorrow, Tuesday, February 14th. And we have previous data at 19.7 thousand, but we really don't have a consensus yet for the claim and count change. So I hope probably as the day go by, we shall be getting an update in that regard so that we can see what is the sentiment for this event. Then we also have the higher low unemployment rate also. We have a 3.7%, which is the previous data, and what we have against the the consensus here is 3.7, which so there is a balance there, no expectations really. So we're going to see how price action will be reacting to that event. Then going forward, we have the consumer price index, which is coming up later on tomorrow too as well, which will be affecting the dollar. And then on Wednesday, we have the consumer price index for the pound sterling. We have a 10.5% previous, and then we have a consensus of about 10.3. That's a little bit deeper than the previous one, so we shall be looking forward to see what the actual figure is going to be. Then on that same day, we have the retail sales for the US dollar as well. And I think at that point, that is the end of the macroeconomic event we shall be looking forward to for this week. So with that being said, here we shall be diving right into the chart right now. So we shall be looking at things from a technical standpoint and then decide what our next line of action will be on the pairs that we shall be monitoring. So I can see some couple of comments here in the comment section. I see Steamroller saying something about okay, USDCHF. Steamroller is asking for USDCHF, so I'll see how I will be able to incorporate that into my plans. Okay, then we have 0067 asking USDJPY. All right, so we shall be looking at too as well. USDJPY is one of the pairs that is on my watch list for this week. So let's dive into the chart right now and see what we're really going to be seeing today. So the first commodity we are going to be looking at today, as usual, is the US oil. And the first thing we want to be doing here is to dive into the daily time frame, where we want to be seeing things from an holistic point of view, after which we are going to be using the technical structures here to decide what our next line of action will be. So on the US oil, we have noticed that price action had been bearish, and this has been consistent since the month of June last year. So in the last 7 months now, price action has been bearish, and as a result of this, we have this bearish trend line to emphasize the strength of the sellers in this market. However, things got a little bit interesting in the month of September, as we saw attempt by the buyers to negate that bearish momentum. So we saw the first attempt come in here around the $75.50 level area. So we had a beautiful demand zone here, which actually has been supporting price action for a while, and this lasted about 2 months thereabouts. We saw buying pressure from that area. And one thing we also noticed since the month of September is the fact that there is a key level at the $80 level, which is one of the key structures we have been using to guide our trading activity since the beginning of this year, and that is the $80 level. And you will see since the month of September how that level at one point in time being a strong determinant of selling pressure in this market. So if you look at this closely, you can see that whenever price comes within that area, we saw level of selling momentum coming in from that area, though it was a little bit, it wasn't strong here in the month of September. But if we fast forward into the month of November, we saw how that level held selling pressure, pushing price to the downside. We saw the same thing happen here again in the month of December. That was the first week of December. We saw another selling pressure coming in from that area, and in fact the year closed around that area. The year 2022 closed around that area, and as soon as this new year began, we saw another engulfing bearish candle taking price action out of that current structure. And in the last couple of weeks here also, we saw how that level also has been a strong selling niche in this market. And during the course of last week's trading session, we saw how price action closed around the $80 level, where at this point you would agree with me that we are at a critical point in this market, as we really need to see how price action will be reacting to the $80 level to decide if we are going to be buying or selling the US oil for this week. And there is another thing I would like to lay emphasis on here, that is the fundamentals, and this has to do with the response of the Russian government as regards to the G7's Russian price oil cap on the Russian oil. And according to what the petroleum minister said last week. He said they are going to be cutting oil production by 500,000 barrels per day, which is about 2% of their normal production limit. And this is a response to the G7's decision to implement the Russian oil cap. And from the look of things, we begin to see some traction in that regard last week, as we were able to take advantage of some bullish momentum. Remember, we were able to buy above the $73.50 level, which gives us a lot of profit during the course of last week's trading session, as we were able to scoop over 600 pips in profit on the US oil. And as we head into the New York session today, what is going to be our plans? And from the look of things here, if you look at the structure closely, you can see that we have been witnessing selling pressure since the beginning of the week around the $80 level, which is more or less something that is very peculiar with the $80 level. So in order to have a better perspective into what is really going on here, I would like us to scale down to a much lower time frame to see how price action has been reacting to the $80 level since the beginning of this week. So in that regard, I will be scaling down to the 4 hours time frame here, and this is what I was able to identify from a technical standpoint. So this is the 4 hours time frame here, and the first thing we should take note of is the fact that price has been bullish, that is since last week's trading session. We saw our price started the week around the $73.50 level, which we were lucky enough to be part of that bullish momentum here in this live community. And one thing we saw here is that we have higher lows here, which as a result of these, we were able to connect a series of higher lows here to give us that resultant bullish trend line. And this bullish trend line has consistently been respected throughout the course of last week's trading session, and we shall definitely be using this trend line to guide trading activities for this week. And how do we intend to use this trend line to guide trading activity? Well, if we see a situation where price action respects the bullish trend line again, whereby pressure resumes above the bullish trend line on our lower time frame, we will have no choice than to join a trend continuation to the upside. And if a further breakout retest of the $80 level, remember that very important key level we identified on the daily time frame, we shall definitely be thinking of adding more position to our existing trade. However, if price action breaks down that bullish trend line that we have identified here, then that will likely be a signal that the trend line may no longer have the capacity to continue to hold bullish momentum. And as a result of that, if a breakdown really happens, then we would definitely be looking out for selling opportunities right below that structure. So we shall be scaling back down to the 1 hour time frame. So we want to see how price action has actually been trading around that bullish trend line since the beginning of this week to decide what our next line of action will be. And if you scale down to the 1 hour time frame, this is what we were able to identify. In fact, I was able to identify a simple setup here, which I think we can use to guide trading activity for this week. And zooming into the current structure here, remember that price action closed last week around the $80 level, and when this week opened, it opened right below the $79.50 level. And what this simply means is that we have a bearish gap. So price closed around the $80 level last week, but opened at the $79.50 level. So this means that during the course of the weekend, there was some trading activities which dropped price below the $80 level. And as soon as the week started, we saw a situation where price dropped from the $79.50 level. And as soon as price tested the, hold on a second, I would like to bring this in a little bit so that we can see things more clearly here. So as soon as price tested the $79 area, we started seeing some buy pressure coming in from that area. So as a result of these, I was able to identify a resistance point for this week at the $79.50 level, and a support level for this week sitting around the $79 area. And in fact, this is a structure we shall be using to guide trading activity for today. And how do we intend to use the structure to trade the US oil? Well, it's very simple. Remember, if we have a flat channel like this, what we are going to be waiting out for is either price breaks out of the structure to the upside to give us an opportunity to buy, or price action breaks down the support level at the $79 level to give us an opportunity to sell. And in fact, as a result of these, I had my sell stop order sitting right below the structure and my buy stop order sitting right above this level, hoping that price action will get this orders triggered at the breakout of the structure. And in fact, in the last hour now, we have seen price action break down the $79 level to signal a possible bearish momentum for this week. And if you look at how important the $79 level is here, it shares a beautiful confluence with that bullish trend line, which we said has been guiding bullish momentum since last week. Remember, we identified this trend line on our 4 hours time frame. That's the bullish trend line here. And the $79 area shares a beautiful confluence with our structure. And as a result of this, if the breakdown of both the $79 level and this bullish trend line happens, then we shall definitely have no choice but to be selling the US oil, at least in the meantime. And as a result of this, we have a sell stop triggered at this point in time. And if you are part of this trade, well done to you for being on standby to catch that move. And if you're yet not in this trade, you might want to join at this point, or you want to wait for price action to come back and do a retest of that structure in anticipation of another wave of bearish momentum to the downside. So having a sell stop order triggered at this point, you want to be having your stop loss sitting somewhere close to the resistance level for this week, or probably above that structure, in order to give room for price action to breathe at this point. So let's see how far this is going to be going for today. And since we already have a sell position triggered, we continue to hold on to the sell bearish bias. And if price action does a further breakdown of the $78 level, we'll be looking out for more opportunities to add another position to our existing trade here. Now, in as much as we continue to look out for selling opportunities here, and as I told you earlier, we have a sell position triggered at this point, we should not ignore the possibilities that buyer could actually come in at this point. And if buyers might likely come in, this breakdown here could turn out to be a false breakdown. Remember what happened last week too? We experienced something like this, where the breakdown of the channel was actually a false one before the bullish momentum finally happened. And if we take into consideration the fact that we have been bullish in the last 1 week, we should not ignore the potentials of buyers at this point. So with this information we have here, we are in a sell position already. That's good. But we should also note that if price action takes us out of the sell position, then price action breaks out of the $79 level, climbing back up the bullish trend line here, it will be a very beautiful opportunity to join the bullish momentum. So if price continues to the upside, breaking out of the $80 level, that will definitely be welcoming additional position to our existing trade. So these are my views here on the US oil for today, and I hope I've made myself very clear here. But if you have any questions regarding what I just explained so far, or you need further clarifications at any point, feel free to drop your inquiries in the comment section, and I will be taking my time to read through the comments to see if there are any questions for me. So I will be taking the next 10 to 15 seconds to read through the chat and see if there are any questions before I move on to the next option. So what do we have here in the comment section? Okay, 3028 says is new here. You're welcome on board, and I hope you are going to find this session very useful in making your individual decision on whatever pair we are looking at for today. So if you really don't understand what we are doing here, I would advise you to stay tuned in, be with us through the session, and try to join us same time tomorrow to 10 a.m. UTC, 11 a.m. West African time. And as you become part of us here, you begin to understand how this works, and you will be able to use the information you gather here for your advantage while you look out for trading opportunities in the positions we have been talking about. So once again, you are welcome. Okay, good morning 716. I can see Francisca again. Good morning, Francisca. Glad to have you around. Sergio, good morning. Janice A3, let's make money. Of course, we are here to make money. Thank you. Good luck to you too as well. 878 Alipo Bazete. All right, good morning to you all. 603, good morning. Good morning, Razak. All right, so in the absence of no questions, I want to assume that we are on the same page here. So I will be moving on to the next option. So the next option we are going to be looking at this morning, as usual, is the US Tech. And on the US Tech, we had a profitable situation here last week on the US Tech, and congratulations to everyone who had been part of that profitable journey for last week. Now that we are going into the new week here, we want to be looking at it from a top-down analysis. So we shall be looking at the daily time frame first of all to have an holistic point of view, after which we will be scaling down to the lower time frame to decide what our next line of action will be for today. So right here on the daily time frame, the first thing we observe here is that price action had been bearish. In fact, throughout the course of last year, we saw how price action had consistently found lower lows and lower highs in that regard. So as a result of this, we had the lower highs here connected, and this gave us that bearish trend line, which has been resisting selling pressure. Resisting buy pressure here, giving us that trend line there. Now things got a little bit interesting later on the year, that is in the month of June, as we saw that every attempt by the sellers to break down the $11,000 level was met with strong resistance from the buyers, and this lasted about 7 to 8 months here. In fact, it lasted till the first couple of weeks of this year, as we saw another buy pressure which came out from the structure, leading to a situation where price action finally broke out of that bearish trend line that has been guiding bearish momentum throughout the course of last year, to emphasize that the trend line does no longer have the capacity to continue to hold bearish momentum. So since on the 24th of January, we saw our price action broke out both the trend line and 11,700, and since then price action has been finding higher highs and higher lows. And one thing that makes this structure interesting is the fact that as soon as price got into the 12,900 level a couple of weeks ago, we saw selling pressure resume again from that structure. And if we look left, you will see how the 12,900 had in fact been a major determinant of price action. If we go to as far back as the month of March last year, we saw how that level was initially a buy zone, before in the month of April/May we saw attempt by the buyers again, but this led into the final breakdown of the 12,900 in the month of May. We saw a retest of structure in the month of June. As you can see, price has been trading below the 12,900, though we had a little breakout of the structure here in the month of June. Price dropped below the 12,900 in the month of August, saw a retest here in the month of September, and since then price has been trading below the 12,900 to further emphasize the strength of the sellers at this point. Now that price has come back into the structure, we saw another selling pressure around this area to further emphasize that there is a level of strength for sellers in this market. So if we zoom into this current structure here and look at what has been happening here since the beginning of this year, we can see how price action has been bullish, finding higher lows, and as a result of that, I was able to identify this bullish trend line after connecting the series of higher lows here, as you can see. So we have a bullish trend line figured out, and price action was caught within a channel first before we saw the breakdown of the 12,400 during the course of last week's trading session. And one thing we saw here when price action closed last week, price action closed at exactly the $12,250 level, which also shares a beautiful confluence with that bullish trend line that has been guiding bullish momentum since the beginning of this year. And at this point, you would agree with me that we are at a critical point in this market where anything could actually happen. The structure here has a potential of giving us a bullish momentum where price action might likely respect that bullish trend line one more time to incite another wave of bullish momentum. And at the same time, we could have a breakdown of the structure to the downside, retesting the bearish trend line, or probably 12,400. Remember, we had the breakdown of the 12,400 here last week, and you know, from a technical standpoint, whenever we have a breakdown of a structure, there is a likelihood that price will come back to do the retest of that level before another wave of bearish momentum will happen. So our center of focus this morning will definitely be around the 12,250 level here, where we want to see how price action has been reacting to the structure since the beginning of this week to decide what our next line of action will be. So before we scale down to the lower time frame, if we start seeing buy pressure around the 12,250 level, then we might likely be getting ready to join a rally to the upside. And if we are joining a rally to the upside here, we want to be taking into consideration the fact that price action broke down to 12,400, that is this channel here, during the course of last week's trading session, and there is a likelihood that price action might come back to do the retest of the 12,400 to incite a wave of bearish momentum. So if we are going to be buying above the structure here, as soon as price gets into the 12,400 level, we'll definitely be moving our stop loss accordingly to secure the buy position and wait out to see how price action will be reacting to the 12,400 level to decide if we are going to be adding more position to our buy position here, or probably price will be rejecting the 12,400 to incite another wave of bearish momentum to the downside. So these are the things we are going to be taking into consideration while looking at the market structure on the 1 hour time frame. So in that regard, we shall be scaling down to the 1 hour time frame to see how price action has been reacting to this level since the beginning of this week. So if we scale down to the 1 hour time frame, this is what I was able to identify during the early hours of this week. So as you can see here, price has been bearish, and we had this demand zone broken during the course of last week's trading session, and that is the 12,400, which we identified on the daily time frame earlier. And one thing we noticed is that as soon as price got into that 12,250 level, we have been witnessing buy pressure from that level. And going into the new week here, that is since the beginning of this week, we have seen a situation where price has been caught within that channel between the 12,320 level, which has been the resistance point for this week so far, and then price action rejecting the 12,250 by the buyers to further emphasize the strength of the buyers at the 12,250 level. So with a flat channel right around between the 12,320 and the 12,230 level, we have a simple setup that will be guiding our trading activity for this week. And how do we intend to use this structure to guide our trading opportunities? Well, we want to be patient enough to see if price will be breaking down the 12,230 level. Remember, this level had been a strong buying niche since the later part of last week's trading session. So if it so happens that price action breaks down the structure, then we might likely be looking out for selling opportunities below this level. However, if price action continues to the upside, just like it has been doing so far in the last 4 to 5, 6 hours now, a breakout of the 12,320 will be triggering a buy position at this point. And with a buy stop order sitting above the 12,320 level, we already have a buy position triggered at this point. Our stop loss should be somewhere right around the support level of that channel, and then we look forward to see how far this bullish momentum will be going. If you are taking advantage of this opportunity, that is, if you have bought above this level, well done to you for being on standby to catch this move. And if you actually bought above the 12,250 level, it also had been a very good opportunity. Well, I actually missed this one right here, as it's a very good area to buy considering how that level has been a strong buying niche since the later part of last week's trading session. So with the situation we have here right now, we have a bullish momentum triggered, and I'm of the opinion that we might be seeing a bullish momentum this week. Now, as the bullish momentum continues to the upside here, remember that we have this key structure here at the 12,400, which we identified on the daily time frame. Remember, that level had been a strong buying niche before we saw the breakdown of that structure during the course of last week's trading session. So as soon as price continues to climb to the upside here, as soon as it gets in touch with the 12,400 level, we will be moving our stop loss to secure the current buy position, as we are going to be waiting out to see how price action will be reacting to the structure to decide if we are going to be adding more position to our existing trade if it so happens that price action breaks out of that level. And if we start seeing sudden pressure, that is price action rejecting that structure, then we might likely be looking forward to an opportunity to join a bearish momentum to the downside. And if you take a closer look at the 12,400 level, you will see how that level also shares a beautiful confluence with that bullish trend line that we identified here. And if you look at this bearish move from a technical standpoint, you will see that price action broke down the 12,400 level during the course of last week's trading session. And from a technical standpoint, whenever we have a breakdown of a structure, there is a tendency that price might likely come back, do a retest of that structure to incite another wave of bearish momentum. So we want to be very careful as soon as price gets in touch with the 12,400 level. And for those who had missed this opportunity here, well, you would want to be patient here and look out for price coming back to do a retest of this level, after which you could add or join that bullish momentum from that area at the appearance of buy pressure on our lower time frame. So this is what we shall be looking forward to on the US tech for this week, and I hope that price continues to the upside here as we have a breakout of that resistant level at the 12,320 area. However, we should also take into consideration that price might likely drop to the downside here. It might not get to as far as the 12,400 before a bearish momentum happens. So if it so happens that price action breaks down the 12,250 level at any point in time, we'll definitely be looking out for selling opportunities on the US tech. So these are my views here on the US tech. If you do have any questions regarding what I just explained so far, feel free to drop your inquiries in the comment section, and I will be willing to be of help in that regard. So I will be checking the comment section from time to time, so be rest assured, if you have questions, just drop them in the comment section. So I will be moving on to the next pair right now, and the next pair I will be looking at this morning is the USDJPY. And in fact, the USDJPY is a profitable trade for me so far this morning. I will be taking you through what my expectations are on the USDJPY and how I got to the point of where I'm in right now. So on the USDJPY, this is one trade we have been monitoring for some time now. And the first thing you would observe on the daily time frame is that price action has been bearish here in the last couple of years. In fact, we went to as far back as the month of September of the year 2020, as we saw there is a bullish range here as price action continued to find higher highs and higher lows in this regard. And so I was able to identify that bullish trend, but things did not get interesting until the month of April last year. So I would like to zoom into that structure so that we can see things clearly here. So in the month of April last year, we started seeing some market structure forming around the 131.00 level, which is the resistance point for that time, and the support level sitting around the 127.00 area. So in fact, we had a huge consolidation phase here, which lasted about a month or a month and a half thereabout, before the breakout of that structure happened here in the month of June. And since the breakout of that level happened in the month of June here, as you can see, price has continued to trade above the 131.00 level to further emphasize the strength of the buyers above the 131.00 area. So price action climbed further to the upside here. In fact, it went to as far as the 152.00 level before we started seeing selling pressure in the month of October, bringing price crashing down into that zone where it was in the month of April/May of last year. And in fact, when price dropped below the 131.00 level, we saw the same consolidation phase between the 127.00 and the 131.00 area. And in fact, the consolidation phase here is a little bit different if you compare it with what we saw around this area. And how is it different here? If you look at the current structure here, at least since the second week of the month of January, we saw that price action had been finding higher lows. You can see this is the lowest point here, and then we have a higher low here. And this makes me conclude that we might be having a reversal pattern at that point. And if we take into consideration the previous impulse leg here, moving price into the 127.00 level, that was the first touch. Price action came into the 131.00 level, we saw the second touch as price was unable to break the previous structure, hereby giving us a higher low in this regard, and this is a beautiful sign that buyers are gradually coming in this market. And if you look at the structure here, we have something like a reversal pattern in the form of a double bottom structure. And whenever we have a reversal pattern like this, the next thing we want to be doing is to identify a neckline for that reversal pattern, which we shall be using to guide trading activity. And we so luckily have the 131.00 level, a very important key level in the last 10 months now, which has been a major determinant of price action, serving as a neckline of that reversal pattern. And one thing that will make this reversal pattern mature is to see a breakout retest of that 131.00 level to give us an opportunity to trade. And what we have seen here in the last 1 week is quite interesting, as we have seen price action break out of the neckline area at the 131.00 level, and you can see how we have been witnessing buy pressure around the 131.00 level throughout the course of last week's trading session. So for me at this point, it's a very beautiful sign that there are a level of buying pressure, buying strength around the 131.00 area. And if we compare the structure of this level with what has been happening in the past, you can see that we have a very strong demand zone around this area. And coupled with the multiple rejection of the 131.00 level during the course of last week's trading session, I was of the opinion that we will definitely be having a bullish momentum from this area. And if we scale down to a much lower time frame to see how price action has been reacting to the structure, and in fact during the course of last week's trading session, I told you we are going to be buying. I have a buy position triggered here which I held over the weekend, and I hope you did as well. If you did, you will definitely be running with more profit at this point, but if you didn't, then we shall be looking out for ways to join this bullish momentum at this point. So in that regard, we shall be scaling down to the 1 hour time frame to see things more clearly and see how price action has been reacting to that structure since the beginning of this week. Now remember, during the course of last week's trading session, we had this channel here between the 131.650 level and the 130.500 area to emphasize the choppy situation we had during the course of last week's trading session. And prior to the CP high on Friday, we had a situation where we were looking forward to buying above the 131.00 level, considering how the 130.500 level has been a strong buying niche in this market. So we have been in the bullish momentum on the USDJPY from this level since last week Friday, and at the beginning of the week, this is what we saw here as price action had started on a bullish note, beginning at the 131.400 level here, respecting that bullish trend line one more time, leading to a situation where price action broke out of the resistance point for last week's trading session at the 131.650 level, and price action has since then continued to find higher highs. So at this point in time, for those who had missed out on both of this opportunity, I mean the one here and the one around this area, well, at this point I would advise us to remain very patient here to wait and see how price action will be reacting to the 132.900 level to decide what our next line of action will be. So as we head into the New York session today, we have a couple of structures we shall be using to guide trading activity. And one of the structure is this bullish trend line here, which has been guiding bullish momentum since on Friday of last week's trading session. As you can see, the pivot lows here. We shall be using the bullish trend line here, and at the same time we shall be using the 132.900 level to guide trading opportunities. So how do we intend to use these structures? Well, the first thing I would like us to do here, especially for those who had missed out on this opportunity, is to remain patient here and wait to see how price action will be relating to this current structure. So one of the things we are going to be looking forward to is price coming back, dropping down into the trend line. If it so drops down into the trend line here, and we start seeing buy pressure around the structure, we'll definitely be looking out for opportunities to join that trend continuation to the upside. And if a further breakout of the 132.900 level happens, which also shares a confluence with that bullish trend line, we shall be looking forward to adding more position to our existing trade here. Now, to make things easier for us to be able to identify these trading opportunities, just in case price drops into the structure here, we have something here to guide our view. So we have something around the 132.250 level, which falls around here. So I will be giving this what color should I be giving this to differentiate it from the previous structure? Hold on a second, please. I'm trying to... Okay, so should I give it a darker color here? So let's give it a dark color, okay? And then we label it 132.250 level. Okay. So we have something like this to play around with if price action ever drops down into that structure. So if it so happens that price action drops into the trend line here, we shall be using the structure here as a platform for bullish momentum to the upside. However, if price action breaks down the structure, that is, breaks down the 132.250 level, which also shares a confluence with that bullish trend line, then that could be a signal that bearish momentum is likely going to be coming in. And if that happens, we want to be patient enough to wait for a retest of structure to happen, scale down to your lower time frame, look out for selling pressure below these levels, then we want to be joining that decline to the downside. So these are one of the things we are going to be looking forward to, just in case price action breaks down that trend line and the 132.250 level. Now, if price action continues to the upside, that is, if it does not drop to the downside at all and continues to the upside, then we shall be looking out for opportunities to add more position at the breakouts of the 132.900 level. So these are my views here on the USDJPY for this week. If you do have any questions, feel free to drop your inquiries in the comment section. And for those who are already in this trade that we have here, I will be advising you to move your stop loss accordingly to lock in some profit. And the most appropriate place to lock in some profit here is somewhere right below the 132.00 level here, so that we can give room for price action to breed. So let's see what happens afterwards. We shall be monitoring this, and by tomorrow we shall be coming back here to review how well this pair has been doing. So if you have questions, feel free to drop your inquiries in the comment section. Let's see if there are any questions before I move on to the next pair. I can see some spam comments in the comment section. Please be mindful of these comments. They are very fraudulent, and XAUUSD does not guarantee the authenticity of these informations that are here. So be very, very mindful of this. All right, thank you. So in the next pair we shall be looking at this morning is the Stimula says we should do the USDCHF. Should I introduce that right now? Do I have two more pairs to go? But if I'm going to be taking the USDCHF, I wouldn't be able to take the other two pairs I have here. So let's go into the USDCHF so that I don't forget or miss out on that pair while I get caught up in the whole situation here. So this is the USDCHF here, and it's been a while since I've traded these pairs anyway. Let me start from that point. And one thing we want to be looking at here is to see how price action has been playing out here from an holistic point of view. Now, if we look at the current structure we have here on the daily time frame, it's very obvious that price action has been bullish. And in fact, I want to readjust this bullish trend line and redraw it. So to do that, we shall be bringing out our line chart here and then connect the series of higher lows to give us a resultant bullish trend line, which we'll definitely be using to guide trading activities going forward. So this is what we have here right now. We have a bullish trend line after connecting the series of higher lows. I'll prefer to use a dashed line here. Okay, so here we go. So we have a bullish trend line here, and during the course of the month of December last year, we saw the final breakdown of that bullish trend line to emphasize the strength of the sellers at this point. So the bullish trend line here no longer had the capacity to continue to hold bullish momentum in the month of December. So we saw the breakdown of that structure by the sellers. So we have a key level there, which we shall definitely be using to guide trading activity. So I will be readjusting the key level here to suit the current structure, and the key level falls around the 0.93800 level, or is it 93750, 93700? So let's label this 0.93700. So we have a key level there. I would like to place it at the top right hand side of my screen. Hello, sorry everyone, I will, please pardon me, I want to be taking like 30 seconds off right now to attend to some personal issues here. I'll be right back. Thank you. All right, I'm back here. I'm sorry for the breaking transmission, please. So where are we? So we are trying to identify the key level for this current structure here, as we saw price action break down the trend line, the bullish trend line, which has been holding bullish momentum throughout the course of last year. So we have a key level sitting at the 0.937. So we saw our price action broke down that structure, did a couple of retests of that structure, and price had continued to find lower lows and lower highs. Now if we zoom into what has been happening here since the month of November, we want to be identifying the lower lows and lower highs. So we have a structure here, and one thing you will notice as soon as you connect the series of lower lows, the lower highs here, you will notice that price action appears to be transitioning into a reversal pattern. And what do I mean by that? If you look at the lower highs here, you see our price has continued to respect that bullish trend line here, and not until during the later part of last week's trading session we saw price action. Okay, I think the first day of last week's trading session we saw a breakout of that trend line to give us a sign that the trend line may no longer hold the capacity to hold bearish momentum. In fact, we saw the breakout, we saw the retest of that structure. That's a very good reversal pattern at this point. So in order to recognize that structure there, we want to be having a key level that we shall be using to guide trading activity for this week. So we have something sitting around the 0.92150 level, which we shall definitely be using as a yardstick for trading activity for this week. So we have a structure of the 0.92150 level, and let me give this a purple color, and let me place this at the bottom right hand side of your screen. So we have a very beautiful situation here. Now we have a demand zone here. Price has been, buying pressure has been rejecting this level, so I will be labeling this as a demand zone. Place this at the middle of this box, so at the right hand side, and then I give this a darker color. So we have a demand zone here where the neckline of that demand zone falls around this area, and in fact we are the breakout of the trend line of the 92150. Price action have been found by pressure above this level, so I'm of the opinion that price will continue to the upside from this level. And if we do have price breaking out of the 0.937 level here, we will be looking forward to adding more position to our existing trade. And another thing about this structure is, another structure is here around the 0.9393 here, which we can also be using to add more position if it so happens that price action breaks out of that level. So let me label that area 0.9300 level, and then we have this at the top right hand side of our screen. All right, so we have in these two structures to guide bullish momentum here. So even if you had bought at this point, it's okay. So we continue to look out for bullish momentum right above this level. So in order to have a better perspective here to further buttress what we've just identified here on the daily time frame, we shall be scaling down to the 1 hour time frame. Then look out for what is happening at this point. Now, looking at the structure here, since on the beginning of this month, we can see that we have higher lows, which we can connect the pivot lows together to give us a bullish trend line. So I'll make this a little bit thicker to emphasize something that we shall be looking forward to guide bullish momentum for this week. So let me bring this closer to our purview. Okay, so that we can all have this in our perspective. So going into the New York session today, we have a couple of structures that will be guiding bullish momentum here. So if you are in a buy position at this point, it's okay. You can be in a buy position right now. So as long as price action remains above this bullish trend line, we will be comfortable in our buy position here. But if so happens that price action breaks down that trend line to the downside, a trend line which also shares a beautiful confluence with the 0.92150 level, which we identified on the daily time frame, could be negating all bullish momentum at this point. So let's remain bullish on this one as long as price remain above the structure. And if it so happens that price action breaks out of the 0.93 level, we want to be adding more position to our existing trade here. So we have buy, breakout, retest of structure. So we have this current structure has a tendency for multiple entries. So I would implore that we be on standby to take advantage of all of these opportunities as price action evolves. So these are my views here on the USDJPY. We continue to look out for bullish momentum here as long as price remain above the 0.92150 and the bullish trend line that we've identified here. But like I said, if price action drops below the 0.92150 level, dropping below the bullish trend line here with selling pressure below the structure, this will definitely negate all buying attempts on the USDJPY. I hope Steamroller is still in the house. If you have questions, feel free to drop your inquiries in the comment section while I move on to the next pair. I'm already out of time now, but I will try to do one more pair before I call it a day. Okay. All right, let me see. Which one should I be taking? Is it the GBP USD or should I be taking the XAUUSD? I think the XAUUSD is the most popular commodity in the financial market generally. So let me just take on the XAUUSD and okay, Steamrollers in the comments. Was it okay? Oh, you're welcome. You're welcome, Steamroller. All right, so let's run through the XAUUSD, and the first thing we are going to be doing now is to scale up to the daily time frame. So we shall be looking at this from an holistic point of view. And if we look at this on the daily time frame, the first thing you would observe is price action has been bullish here in the last 3 to 4 months. And to further emphasize this, we connected the series of higher lows here, which gave us that bullish trend line that you can see on your screen right now. And since the beginning of this year, price action had been bullish after breaking out of this important key level between the 1,800 and the $1,820 level, an area which also shares a confluence with that bullish trend line. And since the breakout of the structure at the beginning of this year, price action has continued to find higher highs, breaking out of structures like the 1,860, the 1,900, after which it fell within a consolidation phase which lasted about 3 weeks on the XAUUSD here. So we saw a situation where price was caught within the 1,950 and the 1,900 area. 2 weeks ago we saw a breakdown of the 1,900, which was a beautiful bearish signal, but we wouldn't be able to jump into such conclusion that price will be dropping further to the downside at this area. And the reason why that is simply because of the structure here, which is the 1860. And what makes this interesting is the fact that the structure, the 1860, shares a beautiful confluence with that bullish trend line that has been supporting bullish momentum in the last 4 months. So we have a very beautiful confluence here, that is the bullish trend line and the 1860, where anything could actually happen at this point. Price could respect the bullish trend line one more time to continue another wave of bullish momentum, and we could see a situation where the consolidation phase above the 1860 will transition into a trend continuation pattern, probably in the form of a bearish rectangular pattern, breakdown retest on our lower time frame to incite another wave of bearish momentum, and at the same time breaking down the bullish trend line, giving us a signal that the trend line no longer has the capacity to continue to hold bullish momentum at this point. So we are at a very critical point, you will agree with me, at this area, and we really need to understand what has been going on here in the last week to understand what our next line of action will be. And if you look at what has been happening throughout last week, we saw our price action was caught within a consolidation phase here, and in fact the consolidation phase has this character about the nature of these weeks. As you can see here, we saw sharp rejection of this area. So we have sharp rejection, sharp wicks here, rejecting the zone around the $1,880 level to emphasize that there is some level of selling pressure around this area. And if I want to be very critical about this current structure, I would need to see price action doing a significant breakdown of the 1860 for me to be very, very comfortable in a sell position. But in order to trade this now, we need to scale down to a much lower time frame. Let's see how participants in this market has been reacting to the 1860, at least during the early hours of today, to decide what our next line of action will be. So as a result of this, we shall be scaling down into the 1 hour time frame, and this is what I was able to find out on the 1 hour time frame. So scaling down into the 1 hour time frame and looking at what has been happening here since the beginning of the week. Remember, the 1860 is that area we want to be focusing on right now, and this is the 1860 here. And one thing I noticed at the beginning of the week is that price action has been caught within a consolidation phase between the 1865 level and the 1857 level. I think I didn't write this out well, so I readjust that to the 1857.50 level. So we have a beautiful channel around this area which could trigger either a buy position or a sell position. And you know, from a technical standpoint, whenever we have a flat channel like this, what we normally look out for is a signal to either buy. If price action breaks out of the structure to the upside, then we could buy at that point, or if price action breaks down the support level at the 1857 level, then we could actually do a sell position on this one. And in addition to this flat channel here is another technical structure which looks more like a trend continuation pattern, and that is in the form of a pennant or a flag pattern, whichever one you call it. So following this impulsive move to the downside, we saw a situation where price has been caught within this pennant structure, and you know, we look out for breakouts or breakdown of that pennant to give us an opportunity to either buy or sell. So for me at this point, I will be using the flat channel to guide my trading opportunity for today. So we shall be looking at either a breakout of the 1865 level to the upside to join a bullish momentum, or a breakdown of the 1857 level to join a selling opportunity. But for me at this point, I will be leaning towards a selling opportunity at the breakdown of the 1857 level. But if the contrary happens, we have no other choice but to listen to the market. Now, if it so happens that price action breaks out of the 1865 level to the upside, I want us to be seeing this as a counter trend opportunity, as this might likely be a retracement of that previous impulse leg that we had here. And so if you are a counter trend trader or a scalper, you might want to take advantage of the breakout retest of the 1,865, and if price continue to move in our direction, you want to be moving your stop loss accordingly to lock in some profit while you wait out and see how price action will be reacting to the 1,880. But if you are not a scalper or a counter trend trader, you not feel comfortable taking advantage of this counter trend opportunity, well, you might want to wait at this bus stop here to wait out and see how price action will react to this level to decide if we are going to be selling. That is, if we start seeing rejection of this level, selling pressure below the 1,880 on our lower time frame, then we'll have no choice than to join a sell momentum here. However, if price action breaks out of the 1,880 level with buy pressure above this level, we'll definitely be looking out for opportunities to add more position to the existing buy trade. So these are my views here on the XAUUSD. So we continue to look out for a breakout of the channel to guide our trading activity for this week. So with that being said, here I'm about to drop the curtain here, but before I do, and for the sake of those who are not part of the beginning of the session, let's quickly run through what we talked about today. So the first commodity we looked at today is the US oil, and on the US oil we have a channel which we have already identified here, and that is the $79.50 level, which is the resistance point for this week, and the support level at the $79 level. So a breakout of the structure will be a very beautiful opportunity for us to join a rally to the upside. And there's one thing here I didn't make mention of during my explanation earlier, and is the fact that considering the buy pressure I've been noticing here, and the area also shares a beautiful confluence with that bullish trend line, there is a tendency that price might continue to the upside, leading to a situation where price will be breaking out of the $79.50 level and then breaking out of the $80 area. So in order to catch this move early, so to be part of this bullish momentum, if it so happens that a bullish momentum will be what we are going to be seeing this week, I was able to identify a setup here on the 50 minutes time frame, which supports a reversal pattern and supports a bullish momentum at this point. And if you look at the structure I was able to identify here, I saw how the $79.10 level had been a buy pressure at one point in time before it was broken to the downside here. Though we haven't seen certain pressure below the structure, so I was of the opinion that if price action breaks above this level, then I will be looking out for buy pressure above that level to join this bullish momentum early enough so that I can add more position if price action does a further breakout of the $79.50 level. And in fact, if we look closely into what has been happening here in the last hour, you will see that we have a double bottom structure right below this level, where the $79 level, which we identified earlier, is serving as the neckline of that reversal pattern. So if it so happens that price action drops further to the downside to do a retest of the $79 level with buy pressure here on our lower time frame, I will be adding more position to my existing trade. So as long as price remain above the $79 level based on this current structure, we are good to be in a buy position on the US oil. So these are my views here. Then we went on to talk about the US tech. And on the US tech as well, we also have a channel, and in fact we already have a buy position triggered on the US tech as price action finally breaks out of the resistance level of the channel we identified here. And for those who are already in this trade, well done to you guys for being on standby to catch this move. And one thing I'll be advising us to do at this point right now is to move our stop loss. I will be moving it to somewhere right around the $12,270 level. And for those who had missed out on this opportunity to buy, I will be suggesting that we remain patient and wait out to see if price action will come back and do a retest of the structure or somewhere around here, followed by buying pressure. Then you could join the momentum from that level. And like I told you, there is a catch to this current structure, and that is the 12,400 level. Remember, this level was a major buying niche throughout the course of last week's trading session, and this level also shares a confluence with that bullish trend line. And remember, we had a breakdown of that structure during the later part of last week's trading session. And from a technical standpoint, whenever we have a breakdown of a structure, there is a tendency that price might likely come back, do a retest of that structure to incite another wave of bearish momentum. So what I'm simply saying here is that if price continues to climb climb to the upside and test the 12,400 level, we want to be moving our stop loss to secure the current buy position as we wait out and see how price action will be reacting to the 12,400 level to decide if we are going to be adding more position to our existing trade, or we shall be getting ready to sell the US tech. So if we start seeing multiple rejection from this level, we shall be getting ready to join a decline to the downside. But if price action breaks out of the 12,400 with buy pressure above this level, we shall be looking forward to adding more position to our existing trade. And remember that the 12,400 level has been a strong buying niche in the past. So if a breakout of that level happen, it will be a very beautiful opportunity to add more position to the existing trade that we are in right now. So best of luck on that one, and I hope you munch my screen so that you can use it as a reference point when you're about to make your individual decision. Then we went on to talk about the USDJPY, which I told you I have a position triggered already. And remember, we have been in this trade since last week as we took advantage of the breakout of the 131.00 level on Friday. And at the beginning of the week, we saw the week started on a bullish note as price action rejected the 131.400, respecting that bullish trend line one more time to break out of that resistant level that was rejecting bullish momentum throughout the course of last week's trading session. Now with the breakout of the structure, we have a situation where price had continued to find higher highs here, and for those who had missed out on these opportunities, what I said here is that we want to remain patient here to see how price action will be reacting with these two structures. The first one is the 132.900 level, where I said if price action breaks out of that structure, we want to be looking out for buying opportunities. However, if it so happens that price action drops to do a retest of this bullish trend line, or probably test the 132.250 followed by buying pressure on our lower time frame, we shall definitely be looking out for buying opportunities above that level. And for those who are already in this trade, I told you to move your stop loss to somewhere right around the 132.00 level. Secure this current position as we continue to monitor price action. Now, I told you how the bullish trend line here will continue to guide our trading activity, and if a breakdown of that trend line happens, that is breakdown of the 132.250, we are not joining the sell outrightly at that point. We want to remain patient to look out for selling pressure as we want to see price action come back to do a retest of the trend line or the 132.250 level, followed by selling pressure on our lower time frame before joining that decline to the downside. So that is that on the USDJPY. Alright, so we moved on to talk about the XAUUSD, and XAUUSD is one pair we are also been monitoring for in the last couple of months now, and in fact we are at a critical point right now as price action continue to consolidate around the 1,860 level, which I said is the key level we are using to guide trading activity for this week. And in fact, since the beginning of the week, we have seen a situation where price action has been oscillating right around the 1,860 level to form a flat channel. And in fact, we have the resistance level of the channel at the 1,865 with the support level of the channel at the 1,857 level. So we are going to be patient here to look out for trading opportunities in the form of either a breakout of the 1,865 level to give us an opportunity to buy, or we look out for a breakdown of the 1,857 for an opportunity to sell. And like I told you, I said I am leaning towards a selling momentum if we take into consideration the bearish momentum that started during the later part of last week's trading session. But when will the sell momentum begin is what we don't know. It could begin below the 1,857 to the downside. If it so break down the structure, we will be a good opportunity to join. However, if price action breaks out of the 1,865, this is more or less a counter trend opportunity, and I told you that if you join this position, you want to make sure you guide your position accordingly as you move your stop loss to protect and secure your position as price action moves in your favor. And one thing I said here is there is a likelihood that if price breaks above the 1,865, we might see a situation where price will be rejecting the 1,880 to incite another wave of bearish momentum. So from this current structure here, we can we can see that there is a possibility of a bearish momentum coming in from below the 1,880 and the 1,857 level. So we need to be careful here so that we can be on standby. So that is why we have a simple setup here that we can use to guide trading activity for this week. Now we went on to talk about the USDJPY, which was introduced to us by Steamroller here, and on the USDJPY we acknowledge the fact that being in a bullish momentum, if you're already in a bullish momentum right now, is quite good. And to guide this bullish momentum, we have a bullish trend line which we've identified here after considering what has been happening here since the beginning of this month, and after connecting the series of higher lows here, we have this bullish trend line figured out. So what we said here is, if price action continues to trade above both the bullish trend line here and the 0.92150 level, we remain comfortable in our buy position. And if it so happens that price action continues to the upside, breaking out of the 0.9300 level, we want to be adding more position, and a further breakout of the 0.93700 level will be welcoming additional position to our existing trade. However, if it so happens that price action drops and breaks below both the bullish trend line and the 0.92150 level, followed by selling pressure below the structure, we'll definitely be considering a selling opportunity on the USDCHF. So at this point in time, this is what I have here, and I hope that we'll be on standby to catch any of these opportunity as they finally happen. Thank you for being around. I really appreciate your attention, everyone, and thank you, Steamroller. Okay, thanks for today. I'll check your post. Okay, all right, see you then. All right, so thank you once again, and I wish you best of luck during the New York session today. And one thing I always say here, remember not to get too excited. This business is not about excitement here. Instead, excitement could derail you from your goal. So what we are looking out for whenever we have a breakout of structure, which is a beautiful signal for us to join a rally, we want to be scaling down to a lower time frame to see that price action is actually going in that direction, and this will come in the form of a retest of structure supporting the direction where price action has broken out of. Then we could join that potential opportunity. Thank you for watching this video, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, and I wish you a wonderful and beautiful evening. Bye bye.